Check mic. Hiya, welcome to my Compound Life. This is a channel where we build assets, we build habits, and of course, we build freedom. And that should really be financial freedom as well as time freedom for you and me and everyone else that watches my channel. If you haven't already done so, please drop a like, hit subscribe, turn on notification. Let me know in the comment section if you're one of my next subscriber. I'm really low in my subscriber counts. As you can see, I'm a very, very new content creator. Any likes, any subscribe can really help me to grow fast, right? And it's important that I gain your likes and subscribe, as that will really support me in growing this channel and helping me to be better at creating content for sure. Okay, so let's start. Imagine guys, waking up one day and finding out your money, the pound, the euros, the US dollars in your bank has lost a huge chunk of its value overnight. Right now, as we have just ended 2025, global government debt is over $111 trillion. That's almost 95% of everything the world produces in a year. This massive debt means more money printing, higher inflation, and real pain for everyday people like us. But there's one asset built to win this mess. Spoiler alert. Yes, I'm going to talk about Bitcoin. Welcome to my Compound Life. I'm your host, Jonathan. Let's get started. So today, we've got a global debt crisis. Hence, is Bitcoin the only safe haven left, right? This hits hard for us in the UK, and I'm sure the same for the rest of the world too. And it could change how you build your future and my future and everyone's else. Here on my Compound Life, we focus on three things: stacking assets that grow over time, building habits that help us to manage our great assets, and creating freedom, the kind where you control your money and your time, and not the government or banks. But this huge global debt is the biggest danger of all of that, especially for us in the UK, with our debt climbing fast after Brexit and recent spending. Government spending, crazy government spending. In this video, I need you guys to take note of the scary debt numbers in the UK, US, and Europe. We'll see why old safe havens like gold and government bonds are starting to fail. And we'll talk about why Bitcoin, with its fixed supply and no central government control or no central entity of control, could be the strongest protection. This isn't just theory, because government debt causes inflation. That eats your savings, forces us to work harder just to stay even. You own nothing and be happy. I'm sure many of you heard about this. These hypothetical future scenarios where people rely on sharing and renting services rather than owning possession is now becoming a reality. Our governments, your government, steals our freedom with higher taxes. In 2025, the average UK workers effectively works about 162 days. That means from January 1st to June, the 11th of June, just to pay all our taxes, including income tax, national insurance, VAT, and others, before earning for ourselves from June the 12th onwards. That's according to Adam Smith's Institutes of Tax Freedom Day calculation. Only if you understand this shift, you can turn it into a massive advantage, right? So let's start with the debt crisis, why it's getting worse in the UK as well as globally. First, the hard facts. Global public debt is around $111 trillion. That's 95% of the world's GDP. It means governments worldwide have borrowed a massive $111 trillion that they owe back, which is almost as much money as the entire planet earns in a whole year, putting huge pressure on economies through higher taxes, inflations, or potential cuts to services. So in the UK, our net debt is about 96% of GDP right now. The US is higher at roughly 124%. The Euro area average around 88%, with, of course, countries like Italy much worse. Japan, it's well over 230%. As long as our government keeps borrowing, printing money to pay for spending, this problem will persist. It will not go away. In the UK, we borrowed over 150 billion dollars, 150 billion pounds last year. Interest payments are eating huge chunk of the budget. This is like never-ending Ponzi scheme. So there's a viewer that constantly comment in some of my video. I think his name, the viewer name 10,000 Islands recently asked, explain to me how Bitcoin is not a pure Ponzi. Well, 10,000 Islands, our fiat system is a never-ending Ponzi, right? Boom, here you go. Let me know if you still think Bitcoin is a Ponzi. Let me know in the comment section. Our government will have to print more to pay off debts, which makes the pound weaker and prices going up. For us in the UK, it feels real. And all I can sum up is our debt crisis and inflation is getting worse year on year, month on month. Ever since I returned back from Asia, I've been away working in Asia for the past 13 years. The feeling of such is definitely real, trust me. Higher inflation hits groceries and bills, the pound drops, and taxes keeps on rising. And for us in my compound life, we are all trying hard to improve our personal finance situation. But the government debt crisis destroys our progress because your saving lose value, good habits like budgeting gets harder, and financial and time freedom just feels so much more distance away the harder that we work. If debt crisis is bad, how should we invest, right? So some might say old safe havens, golds and bonds, silver. Some of you love silver out there recently. All of these are weakening. People always run to gold and government bonds in tough time, but are they still safe today? So let's start with gold. A traditional hedge with growing vulnerabilities. Gold has long been viewed as a safe haven, no doubt, during debt chaos. And as you can definitely see in recent half a year because, the rising of the value of gold versus, the US currencies getting weakened. So, for instance, during the 1970s US stagflation, driven by debt and oil shocks, gold surged over 2,300% as inflation eroded dollar purchasing power. More recently, amid post 2008 quantitative easing and the 2020 debts built up, gold climbed from $1,800 in 2020 to around 4,450. I think that's the recent all-time high per ounce today. So central banks have ramped up purchases with holding hitting record highs in 2025, signaling institutional confidence in its role as a reserve asset against their currency debasement. However, gold's protection isn't as ironclad in today's environment, especially for individual investors in the UK and Europe and everywhere else. So I want you guys to pay more attention on the limitation of gold, right? Its physical nature and logistically challenges. So unlike digital asset, Bitcoin, take for instance, physical gold, bars, coins, it's cumbersome. Storing it securely requires vaults or safes, incurring ongoing costs. I think there's an estimated cost of 0.5% to 1% annually for securing your gold. In a crisis, moving it quickly across borders or have the ability to liquidate gold can also be problematic. Imagine you're trying to get across border, you're trying to get some money off gold, right? How can you divide it? Take for instance. So yes, a lot of problems with gold. Imagine evacuating during economic turmoil, and then you're carrying gold bars, your bullions, etc. While gold ETF offer paper exposure, they don't provide true ownership and can face redemption issues in extreme situation. As seen in past market freezes, this physicality reduces its agility compared to asset that can be transferred instantly through an app or digital wallets. So that's the limitation of gold. And of course, holding gold, holding cash, holding paper gold, holding cash in the bank account, all the same. Historically, risk of government confiscation, right? So government facing debt crisis have a track record of seizing gold to stabilize currencies or fund deficits. The most infamous example is the US Executive Order 6102 in 1933 under President Roosevelt, which forced citizens to sell their gold to the government at $20.67 per ounce below market rates before revaluing it to about $35 in between, netting about 69% of profit for the treasuries. So similar actions occur in Nazi Germany, 1930s asset seizure, Australia, 1931, gold export bans, and even in the UK, 1939 to 1945 wartime controls on private holdings of gold. So in a modern debt meltdown, cash-strapped government could impose export restrictions, force sales, or even digital tracking on gold transactions eroding its untouchable appeal. Another thing, limitation of gold, tax and regulatory burdens. In the UK and EU, investment grade gold, bullion bars, over 99.5% purity or legal tender coins, is VAT exempt since 2000, aligned with EU directives. However, non-investment forms, example jewelry, or certain transactions may still attract 20% of VAT. And capital gain tax, CGT, applies on profits. So that's about capital gain tax in the UK is about 20%. So during a crisis, new taxes or reporting requirements could emerge as seen in past emergencies. This adds friction, especially for cross-border holding. And of course, gold has limited upside in a digital world, I guess. Gold's supply grows slowly 1 to 2% annually via gold mining, of course. And constantly you'll be hearing this country somehow found a huge stash of gold mine that can potentially up the increase in terms of circulation by whatever percent, right? So in a way, it's not exactly scarce. And of course, but it lacks utility beyond storage of value, right? In prolonged debt crisis, of course, gold, it can help preserve wealth, but rarely delivers explosive growth. For example, 2025, gold surged 66% to 4,450, outperforming Bitcoin, more modest gains amid volatility. Yet, analysts predict moderated returns in 2026 as inflation eases, and some forecasting only 10 to 15% upside. So gold's performance is only tied to physical demand, which can falter in global recessions. And the physical demand usually just comes from a few key countries. China, I think Russia too, because Russia has some sanction, so they probably need to stack gold. China, in a way, they couldn't quite stack Bitcoin yet, so that's why they resort into gold. So, in summary, gold offers solid protection against inflation and devaluation, but falls short in mobility, security from intervention, and growth potential. Very, very capped growth potential, making it more of a defensive play than a path to real freedom in compounding wealth, right? So that's why we don't tend to want to compound gold in my compound life. It can be a good speculative asset every now and then. If you can see that in the short trade, gold can have a better upside versus Bitcoin, then maybe it makes sense to buy some gold and then eventually rotate that back into Bitcoin. Buy some gold, have some good gain, and then rotate that gain back into Bitcoin. That's how I would do it anyway. So now let's look at bonds, right? Because a lot of you guys still believe bonds are great. Why bonds? They're becoming a bigger risk in a world full of government debt. So government bonds such as US 10 years treasuries currently has a yield of 4.16%, or UK 10-year gilts around 4.5%, used to be seen as a super safe places to put your money. People called them risk-free havens. But in debt crisis, things change. When you buy these bonds, you're basically lending money to government that are already deep in debt and struggling to pay their bills. And here's why that's a problem. If inflation goes up, right, it eats away all the small interest you earn. Your real returns can turn negative. If people lose trust in the government and the interest rate rise, bond prices drop sharply. In the UK and Europe, these bonds are linked to same shaky money policies like ECB printing lots of cash that are causing the debt mess in the first place, making the risk even higher. So, expert like Ray Dalio warns about dangerous doom loop, doom loop. Okay, doom loop. Okay, it's actually doom loop. So governments borrow more, print money to pay old debts, which weakens the currency and pushes inflation higher. In the end, your bonds lose real value. So rely on bonds feels like playing a game that's rigged against you. And you're betting on the same system that's breaking down. So you tell me, let me in the comment section, are you more into bonds or into Bitcoin? Or are you into three of them because you're too afraid to place the wrong bets? And then that's why you're into bonds, gold, as well as Bitcoin. Okay, so if government bonds are a big no and gold might be a yes for your portfolio, then how does that compare to Bitcoin? And can Bitcoin grow faster than gold? Okay, that's something I want to address. So gold is great for spreading out risk in your investment. So for example, investor like Ray Dalio suggests putting 7.5% to 15% of your money into gold to protect against bad times. Totally not my suggestion. Okay, but gold has its limits. Bitcoin is often called digital gold and could be even better for investors who want big growth, especially if there's a lot of government debt and money losing value. And Bitcoin has a fixed supply of only 21 million coins ever, like gold's limited amount, but it's digital. That means you can send it anywhere in the world instantly. No need to store heavy physical bars. And it's harder for government to take it away if you keep it safe yourself, like in a hardware wallet that your government can never find out or people can never find out. So in the past, Bitcoin did really well when government printed a lot of money. From 2020 to 2025, Bitcoin went up about 500%, more than 5 times your money, while gold went up about 100 to 120%. Right now, on January the 3rd, 2026, Bitcoin is around 89,000. Yeah, 88,000 to about 89,500 after some ups and downs in late 2025. In times of high debt or money problems, Bitcoin can drop fast in short panics like 2020 during COVID period. But of course, it bounces back really strong and acts as a good hedge over a longer period of time, right? So it has beaten gold in growth after several years, for sure. Maybe not 2025, but for sure, Bitcoin has definitely outperformed gold and any other asset class out there. So many experts predicts Bitcoin could reach 120,000 or more in 2026, or even exceed that. So unlike physical gold, Bitcoin is fully digital and borderless, no easy way for government to grab it. This makes it useful in a worldwide money crisis. So in short, gold is a solid, safe choice for protection, but for bigger possible gains in a debt-heavy environment, debt-heavy country, uh, of course, Bitcoin often looks like the stronger digital version of it, and with more upside. Though it can be bumpier, it can be volatile, but that's the price we pay for investing in Bitcoin, I guess. So the bold truth, these old safe havens are part of the fiat world that's breaking. Gold is good for some diversification, but it's not perfect in a digital crisis. And of course, bonds feels more like a trap. So my compound life, especially here in the UK, sticking only to these gold and bonds won't give you the big growth needed for real freedom. That should really be financial freedom and time freedom. So pick your asset wisely. So what this means, well, you need to start stacking Bitcoin now or soon, or always be stacking. Based on what I've spoken about, what should we do? Well, Bitcoin looks like a top safe haven, maybe one of the maybe Bitcoin is only the pure one left out there, right? Not even gold. So gold, keep a little for variety. Bonds, I think just move out from bonds. They're risky in the debt, in the debt storm. Right now, Bitcoin is at a high of 80,000 or low of 90. As long as you dollar cost average, pound cost average, I think this would be a good level. Buying the dips. Looking ahead of 2026 and beyond, as that problem grow, it will definitely grow, right? Even in the US, I think in the end, the US Donald Trump scrap Doge. So this will continue. The debt issue will continue in the US, and the same for the rest of the world. And Bitcoin could rise a lot as more people and even countries moved into Bitcoin. So my direct advice, certainly do your own research, not financial advice, is to stack more Bitcoin. Do it regularly. Don't switch to old assets like gold or silver or bonds. Go strong on the one made for this world, and that's Bitcoin. Yes, it's volatile, but that's the price for big upside, right? And you can definitely get your financial freedom, time freedom through stacking Bitcoin. No matter where you are, Bitcoin can help protect against inflation and pound drops, US dollars drop, euros drop. More importantly, stacking Bitcoin helps speed up real freedom, because the CAGR that you can get from Bitcoin in an annual basis will definitely, no doubt, outperform any asset class out there. And this can be our way out, as I won't rely on metal, gold, or silver. The safe play on fiat is the biggest risk of all. So let me know in the comment section, are you stacking Bitcoin right now? Or are you following the crowds stacking gold or silver? If you like my content, help me out. I'm a small content creator. Hit the like, hit subscribe, and I'll see you in the next video. Bye guys.